So first of all, thank you so much for being here. Thank you. There was some technical glitch, so we had to pause a little while and we all delayed today. But thank you so much for being here. And today we are going to discuss about candlesticks, Japanese candlesticks. Japanese candlesticks are something which are famous and prevalent all around the world. Uh, if you see 20 charts, 20 people open the charts, about 19 people would have actually candlesticks chart open in front of them. So without any further ado, I will start this presentation and I'm going to talk about candlesticks. We're going to cover all the different agendas of this chart, of this type of technical analysis. I'm going to also discuss a few basic candlestick patterns, use a lot of examples. I'm going to show you live examples and tell you how to use candlesticks and also how not to use candlesticks. This is Mr. Steve Nissen. So candlesticks began, the concept of candlesticks began in Japan more than 300 years ago. And this gentleman was the person who got candlesticks from the east to the west. So when he got the candlesticks from the east to the west, there was an enormous amount of research that he needed to do. Because what exactly happened is that candlesticks were invented in a very weird way. There was never any kind of trading at that time. Suddenly, after a war scenario in Japan, there was a lot of struggle for food, etc. And eventually rice became the currency. When rice became the currency, people kept it in these huge godowns, and instead of having that rice around with them, they used to have this piece of paper on which it was authorized that this is their bag of rice. Soon enough, in the different cities and as people traveled, these papers and authorization or licenses of having own rice kind of created value, and they began exchanging them, and they also began trading them. And in these places, there was a lot of trading then going on, and people used to trade for money, trade this for money, and used to bet on the different price movements. So in the war situation, a lot of candlesticks the advanced ones especially, which are told to students, which are authored by the best of authors, have this nomenclature and terminology of warlike and battlefield-like situation. So this is the essence of where it started from. There was someone called Homa, and he was a great trader. He's supposed to have got more than 1,000 trades in a row, right, or something like that. He also wrote a lot about candlesticks. A lot of people a lot of scriptures were dug out and dug into, and they compiled together. And Steve Nissen's work has contributed a lot to the West in terms of getting candlesticks from East, refining them, and presenting them in the best way. And when I like talking about Steve Nissen whenever I teach candles, it is because I have been taught by him personally. A little bit about me. My name is Mohak Pachisia, and I'm a chartered market technician, a chartered financial analyst. Basically, I'm educated by the best two institutes in the world. But what does not matter is the degree. What matters is what I can get in front of the screen, with what I can do in front of the screen. I'm a trader, a full-time trader. I train people. I go, to different places, sometimes different cities. I train live. I train online. I have my own course. In my experience of trading in the last 8 to 9 years in the markets, I have learned a lot. I started from the very root levels, and because I had been acquainted to the subject at a very young age, I started digging deep into it, eventually even getting formal education. But the entire scenario is that what is out there, what is there when you Google things up, etc., is a lot of unfiltered garbage, a lot of educated garbage is out there, and which does not allow traders to have a clear perspective how to use technical analysis. Just like markets are things, market shows price movement, that stimulus creates stimulus of greed. A lot of indicators that are spoken about, a lot of methods that are spoken about actually give more greed than practicality to people. Until and unless we are willing to get into the grind, we are willing to go ahead and do it ourselves, it is very difficult for us to make money out of the market. So I had this entire journey where things were difficult for me. I had to fight through and I had to work through different concepts and different ways, use my creative ideas, read over hundreds of books in trading, technical trading, psychology, or I'm authoring a book myself on trading psychology. Apart from that, I am associated with a European company, so I trade for them. I trade for my own money, and there are a lot of associations which we have. So moving on, I'll also tell you who I am not. So you see this person in front of the screen, on the screen that I've shared. I'm not this guy. I don't have a crystal ball. Okay, I don't have a crystal ball because whatever happens in the market and any form of analysis has a probability. It is probabilistic. Yes or no? We are not attuned to thinking in terms of probabilities. Therefore, it makes it very difficult to trade and understand any form of analysis. Analysis, technical or fundamental, any analysis is based on probabilities, not certainties. What is technical analysis, technical trading strategies? What do they give us? They give us an edge on every trade? No, over a series of trades. For more information on this, you can visit my previous webinars, recordings. I'll share everything with you guys. And eventually we are going to come down towards the more technical aspect today in today's free webinar. That will be candlesticks. So candlesticks are something which started very early, one of the oldest forms of technical analysis. And eventually what happened is that in today's world, as soon as it came to the West, looking at the dynamics, the advantages of candlesticks and using candlestick charts, I don't think today there's anyone in the world who uses anything else but candlestick charts. So the reason why they have an edge and they have an advantage over other technical charting styles like line charts and closing charts and bar charts is because candlestick charts involve a lot of other aspects. Let's talk about firstly what is the the first thing which it really accommodates, which the line chart does not. On the line chart, we see that every line is plotted on one point, which is the closing point of the day. So the closing point of the day all join together, create a line chart. In the case of a bar chart, we may have something else. But in the case of the candlestick chart, we are using the open, the high, the low, and the close of a particular time period. For that, now we stick into the anatomy of a candle. What happens when we, let's just look at the anatomy of a candle. Then later, we will take few candlestick patterns and we're going to discuss further into it. So let's take this red candle for once. You see the open? So the open is higher, the close is lower. Red gives us anyway a sense of bearishness. So the major difference between a red and a green candle is the opening and closing. That is what defines the color of the candle. So in case of a bearish candle, The open is higher, the closing is lower. Bullish candle, opening is lower, closing is higher. The area between the open and the close is the real body. Is what? The real body. So this is the body of the candle. Whenever we speak of the candle, we speak like this. This is the body of the candle. Apart from this activity in the real body, above over here, the part which is the high, up till the high of the day and the opening, this is the upper wick. Up till the high of the day and the closing is the upper wick. The low of the day and the opening is the low of the day and the opening is the lower wick. The low of the day and the closing is the lower wick. So these areas which I am highlighting now are the wicks of a candle or the shadows of a candle. So whenever we're going to speak today, we're going to speak about the wicks of a candle, the shadow of a candle, or the body of the candle. You have to understand and follow exactly what I'm saying. So when I say upper wick or higher wick, that means this one. Lower wick, this one. Body of a candle, this one. Right? So understanding this and taking it to the next step, we have to understand why all this is important to us. Why is a wick, a real body, open, close, lower wick, why is all this important to us? Because in the smallest things, in the smallest details, the biggest of the secrets are hidden. And not just that you have to develop the eye for the smallest details, you need to be theorize about it properly first. Then you know what to look for. It becomes extremely confusing because the more lucrative, the higher the risk reward, the more noisy the chart can be. So if the chart can be extremely noisy, you need to understand that there are only specific things you need to look forward to. Or else you will land up in a situation, as I spoke on last Sunday in my previous webinar, just like a dog crossing the road, and he thinks that, oh, I'll cross, I'll not cross, I'll cross, I'll not cross. He's so indecisive. And we become those dogs who look at the screen and we are like, okay, now buy, now sell, now buy, now sell. Until unless we know what are the filters to put and what clearly to see, it becomes extremely difficult for us to go a step further and take out excellent results from it. So this is the anatomy of a candle. Whenever you see that there is a real body, this body area. Also, I'm going to use this terminology. I'm going to call it a day. So this candle can be a 5-minute candle, a 15-minute candle, a hourly candle, 4-hourly candle, daily candle, weekly candle, whatever, monthly candle. But when I'm going to talk right now, I'm going to call it a day, so that it's very easy for us to kind of grasp what I mean. I won't call it a period, I will call it a day. It is equally applicable to any time period. So this day, prices closed over here, they opened over here. So the one day before that, the previous day, there were many people, traders and participants, who were carrying a lot of their positions from the open through the close. Another set of people have carried a lot of positions from the open, or now on the red candle, the bearish day, open, close. So when it is opened, before it opened, a set of people have carried the position through for the day. And at the end of the day, a lot of people again have carried the positions towards the next day. So whenever we are speaking about real body, whenever we are speaking about real body, we are speaking about this area, and we are speaking about this area. What really happens is that this real body area is the activity of trading enclosed, the activity of trading enclosed between positional traders who are jumping from the, say, the daily charts to the next day, to the next day, to the next day. This is enclosed within the position bandwidth of the traders. This area, the area between the open and the close, is the area which is enclosed between the positional traders. Is everyone in alignment with what I'm saying? Is everyone catching what I'm saying? The area of the wicks, the area of the shadows, they happen during the intraday. It is very important to know what's actually happening. So the market opens here, it goes up. So if you have a position which is a short position, it goes here, it goes up. It goes down, dumps down, it goes lower, it closes over here ultimately. So during the time it went up, had it closed over here, maybe you would not have carried your position to the next day. Are you all understanding what I'm trying to say? This area, which is the real body, this area, which is the real body, has got everything to do with the position traders who go through one day, and land up carrying forward the position. So there may be the same traders, there may be a different set of traders, but the idea is that this real body zone is the price range of the day, which is enclosed between these two kind of enclosed between open and close, where the positional traders are carrying over their positions. If you have any question, you can ask me. I know a lot of you have not done any class with me before, and even my course Candlestick class comes a bit later, not in the extremely beginning, so it may be difficult for you to understand something, and I can completely understand. However, I am trying to make it as simple as possible for you. So there is a question panel. If you have any question, you can ask. If you're understanding what I'm saying, good enough. Okay? Question panel. Okay. So my voice is echoing. Is my voice echoing? Too bad? No, voice echoing too much. Nikunji, if you want to ask any question, your hand was up. Okay. Thank you. Let's continue. So this area is the wick area. Yes. This area is the real body area. Correct. I've got a couple of questions. So Fabarish asks me, shadow represents buying or selling pressure of the intraday traders. Okay. Mohammed asks me, does real body include volume related? Okay. I'll answer both these questions. So first, let me start with what Fabarish says. Vivarish says that the pressures of selling and buying of intraday traders are extreme. But that's not the case, correct? Now, Mohammed asks me, 1 minute, let me just 1 minute. Okay, can everyone hear me now? Am I audible now? Okay, thank you. There was some connection issue in between, and this is happening today only because this generally doesn't happen with us. And I'm going to continue. So please bear with me. Yes. So what happens is that in this entire scenario, in this entire scenario, as Vipanish asked, I was solving a question, and in the process, I would also like to tell you that whenever we see Vipanish has asked and Mohammed ji has asked, so Vipanish का मैं answer करता हूँ पहले that if I say that this is the pressure of intraday traders, I'm correct, but this is also happening in the day itself. So I'm going to clarify on this. I know where your mind is going, but I'm going to give you another clarification on this. So secondly, Mohammed ji asks, is this related to volumes? Is the real body related to volumes? The thing is, Mohammed ji, volumes are there throughout the day. Like, now, maybe you're asking this question because you may have read somewhere that if a good candle which has a good body, a green body, maybe some particular pattern like a bullish engulfing pattern, happens with good volumes, it is good, right? So the body has got less to do with volumes, it has got more to do with the clothing. So if we have a wide range in the body, obviously if there are volumes throughout the day, the volumes can be from here all the way till here. That is not a problem. In a day, the volumes can be throughout the day. In fact, it may be so that in a bearish candle, here only the volumes have started declining. But the entire idea is that the body is representing the area between the open and the close, and the wicks representing the area during the day which are not falling in the range of an open and close. And as Vibarish also is partly correct, you are also partly correct in terms of volume, not volume, but the positions carry forward. So when positions are carry forwarded, then there may be a good addition or subtraction of volume in this area. And as Vibarish says that is this the activity of day traders? Yes, it is, but then it includes this also. I'll come to why this is the activity of day traders and probably maybe clarify around. So moving on. Uh, Thank you for asking questions. It's really good. And I'm going to give you more points on what these candles can mean. So what do candles represent? First of all, candle represents the emotion of the market, right? Candle represents the emotion of the market. So what do you mean by the emotion of the market? The emotion of the market means that whenever there is a green candle which is long going up, green candle which is long going up, it visually gives us the idea of a strong bullishness. Whenever there is a green candle which is going long, and it's long, strong, and with a major part of the candle covered by the body, gives the idea of bullishness. On the other hand, this red candle which is long, strong, gives the idea of clear bearishness. So if I have a vertical almost fall, then the candles of red candles will be, one after the other falling. So they are representing the nose dropping fall of the emotion of the market, right? So this gives the idea and emotion of bearishness. Second point, the momentum of the trend. Well, there are two parts. I'll here segregate candle into two parts. I'm guessing all of you have dealt with candles either in your reading or in your trading or both. So, when I'm going to talk about the momentum and the emotion of the market, I'm talking about those candles which are not a part of a consolidation, congestion, noise, turnaround, cluster, congestion, etc. When I'm talking about singular candles that are extremely visible, clear to you, they may be a reversal candle, not a problem, but they are visible to you. If they are visible to you and you are clear about it, that gives you another sense. And the candles which are not visible, the ones which probably give you the false signals, they kind of form a congestion, they kind of form a dent on the movement. Those candles are candles which create less momentum. So the momentum of the market and the emotion of the market, the sentiment of the market can be seen. So in case of a strong red candles, market is falling, market is falling, market is falling. So here, every candle every day is showing us extreme level of bearishness. Now, I have some pullback, some time, some pattern, something or the other happening. And finally again, market is falling, going up a bit, falling, falling. This area is different fall, and this is a different fall altogether. Yes? So, obviously we're going to do this with examples again. So this is the sense that the candles represent. They give us the momentum of the trend. They give us the emotion of the market. When you have that in your reading, when you have that in your reading, you not only know how the price is going to unfold in the future and have developed a certain probability towards it, you also know what the speed is going to be like. Because as I always say, हमें as traders ज़्यादा काम नहीं करना है, हमें सही काम करना है और हमें सही काम इतना अच्छे से आना चाहिए कि हमारे पास काम की कभी कमी नहीं. So whenever you see that you have to read candles, read them with certain qualitative input. If you have been able to read it with a certain qualitative input, I'm not yet got the theory also, but when we do so, you're going to see that they're going to segregate your false signals with the real signals. From all the signals, the shaft is going to, the weight from the shaft is going to separate. The sense of patterns and the formation. Point number 3. So, the sense of the pattern which is under formation is always given to us through candles. For that, I will illustrate you with an example. So, I'll take this chart up, which is something I was trading just 1 or 2 days back. So, the German company, as I said, I'm involved with, beside my own trading in Indian markets, is called Phoenix Investment. And what we did is that, one second, waiting for my Google Chrome. So yesterday, or the day before yesterday in the night over here, so I was looking at this chart of New Zealand and USD, and in this zone, obviously, with the help of other concepts, I was looking for a bullish movement in this zone. So what happened is that I could have bought here, I could have bought here, I could have bought here, everything, correct? As the pattern, as the candle unfolded, it began giving me a sense of this downward channel. Now I'm not saying that this was something which the candles told me, but I'm saying that because I had the highs, the body, the size of the body being small and uneven. When the size of the body is small and uneven, you get to know that the trend is not a one-sided volatile trend. When the volatility is low, the candles are noisy. When the candles are noisy, and if you follow them, they can give you a sense of what the pattern and the formation is. And in this zone, I already went long much before the pattern breakout happened. I'm showing you an example on hourly chart. If I show you an example on daily chart, you would go baffled by the risk reward candles. So candles represent a sense of the pattern which is in the making, which is unfolding in front of you. What does the candles, does it represent also? The last point, the fear of price going against you. That's why this is the dance of candlesticks. Because when these candlesticks are dancing right in front of you, in the real-time chart, you find it extremely difficult to react and sometimes to read what the candle is actually trying to tell you. The truth is, they're just trying to tell you nothing. You have to wait for the hourly candle or daily candle to close. So when the candlesticks start representing a fear towards you, to you, and okay, this is happening, I'm going up, and you say I'm short. So I'm going up, I'm going up. And when you're short and it's going up, And by the time it closes, by the time it goes up, you start feeling that it will close there. So don't over-analyze. Don't analyze before the candle's time period gets over. You can only analyze your daily chart after the day has closed officially. Of course, you can estimate a lot of things before that, but you can only analyze an hourly chart after the hour has finished. Of course, again, you can estimate a lot of things. But the thing is that when things are going against you, you don't step out of the market and out of fear, in the fear of getting that trade wrong. Don't talk yourself out of it. You might talk yourself out of a very good trade. How many of you, have, with analyzing candles in your journey, uh, have faced this point? You know, this point. How many of you resonate and reflect upon this point? Raise your hands. I have. In my learning process, I have. How many of you have? You can also, if you can't raise your hand, then you can write the question in the question box also. Right? You have experienced this. Correct. Right. Some of you have experienced this. Thanks for participating, interacting. So, you're getting my point. You have to be clear about what candles represent. Now, what I just showed you on the chart, when I showed you the pattern, that was the particular reason why I bought. But I'm trying to tell you what the candlestick represent. And anytime it is, I try to beat Indian markets, international, beat even going into different cities or having conference with international traders. I always take up very recent examples, which is not just fresh in my memory, but fresh in your memory too. Some misconceptions of candles. First of all, people start thinking that candles are meant to tell us what will happen next. क्या कि ना इतना सुंदर दिखता है, it seems so nice, and it kind of feeds your greedy animal inside you. It seems so nice when someone comes and tells you, see, this is the candle, this will happen. This is the candle, this happens after this, and you start spotting it because it's a fun thing. It feels like a puzzle solving, right? Analysis, of course, analysis is like a puzzle solving. It's fun, but the thing is, in the fun of it, sometimes we kind of get into the drive of greed, and when we get into the drive of greed, we try to forget the practicality. A lot of things which are told to you on Google or in a lot of books are not tradable. They just look good. So candles are not meant to tell us what will happen next. So if you see a photograph and say, okay, this is the candle, this happens, this happens, this happens, and after this is bullish. No, you need to go inside everything. Also see that it is probabilities. A lot of candlestick patterns, especially the basic ones, which everybody talks about and knows, have very peculiar quality that sometimes it will not become bullish if it is a bullish candle. Price will become sideways. In some cases, it will continue to going down. So, just like I always tell this to people, that one tool, candlestick is a tool. It is not a trading system. Similarly, the other tools or concepts. So anything in isolation, anything if you apply only singularly, does not work. It does not work for you. It is always about getting things together and forming a conjunction of concepts. Similarly, when it comes to candlesticks, just by knowing what a candle looks like, the pattern looks like, you can't just say, okay, I found this bullish engulfing. This is bullish. I found this hammer. This is bullish. This shooting star is bearish. Blah blah blah. They have to look at in conjunction with other things and other properties of that candle pattern itself. Because every candle has its own properties. And they're very individual to every candlestick pattern. See what I'm going to, it is not very possible. I give about 3 classes and I give one homework class in my course for candles. It's not possible to put in all the candlesticks in one, session altogether. But what I'm trying to tell you, if you just understand the perspective and we discuss some of these candlestick patterns as I plan to do today, it will just change your perspective about candles. Anytime you see that you resonate with something I say and it's happened to you, you can type it out. You can ask me anything if you want. Number 3, very important point, very extremely important point. A lot of people think that candlesticks has got nothing to do with time frames. It just got to do with the look of a good candle pattern. So please rule this out. Candlesticks are actually not meant to tell us what will happen next. Every candle is not significant. There are a lot of candles which are waste. There are a lot of candles with very peculiar characteristics. Time frames. You cannot forget time frame. Any time in technical analysis is the study of price and volumes. A lot of people say, I say it's the study of price and time. Because always your x-axis is time, your y-axis is price. So when we are talking about trends, we always talk about different time frames. When we talk about candles, we should talk about different time frames. Your entire reading of candles will improve if you include another filter. What are the filters we use? With these misconceptions going away, we are filtering out and getting to focus on only those candles, which are not just patterns, but these filters are supporting them. First filter, we don't know what candles are going to tell us to happen next. So at that time we say, okay, what can happen? Anything can happen. So if there's a hammer pattern, what can happen? Price can go down, sideways or up. But the hammer pattern is supposed to be a bullish reversal pattern. Okay, fine. The price could either go sideways or it could go up. So at least I have 2 scenarios and 2 probabilities. A lot of you I know have seen a lot of good candlestick bullish pattern and you've bought into them, and the next thing you do is the next 5 days price is sideways. Obviously you're missing out on something. Then you say it's not that perfect. Then you say it does not work. You have to make it work by focusing on multiple things. So the power of fractals was speaking about at length in my previous webinar. I said, you must go and watch the video. So borrowing it from that webinar, the power of fractals. You can never forget time frames. Time frames is the most important thing in technical analysis. If you look at something in different time frames, it boosts your results, boosts your accuracy. And different time frames also lead you to the best of the moves. When we talk about power of fractals, we said the best moves can come with the best setups. Every day we don't have to work. Every day we don't have to sit in front of the screen all the time. We have to do less and do that less, very quality less. Do it very nicely. I sometimes say just to take a couple of trades during the week, 5-6 trades during the week. I actually go to office every day. Although it's more than 5-6 trades in a week, but however, just trying to put it in perspective. Sometimes the work for a trader is not to take a trade at all, not to analyze at all. Wait for a time to go. Wait for things to unfold. So when we're looking at time frames, we add a filter of time frames. We wait for things to unfold. Last thing, another huge problem, a green candle goes up, price will blast. People tend to think that way. How many of you have got caught in such price movement, be it in the daily intraday movement or the weekly or positional trades? You see green candle going up, you think price will blast. You got caught now. Vibarish says, asked a very pertinent question. He says, let's say if I am a day trader, what are the time frames I should look at? But I'll come back to you, Vibarish. At the end of the webinar, whenever I get the opportunity, I'll mix it up with something else and come to you. I will answer your question. But in the last point, how many of you understand the last point? I resonate that this problem has happened with you. You think that the candle is green, it is big, it is long, or up to 40 hours. The next thing you know, is there nothing like that is going to happen. You've experienced this? This is another misconception. So rule this misconception out. Just because candles is green and long and strong does not mean price will continue going up forever. Then you can be caught at the worst price. Just because the candle is red and pessimism, it's showing a lot of pessimism in the market, doesn't mean you will go and just have a lower circuit the next day. Yes, some of you experienced. Right. Now I think I'll answer some questions while explaining. How to learn candlestick patterns? First of all, you need to understand that you categorize the candles according to a couple of things. One of these things being सबसे पहले time frame. So when I talk about time frame, what do I say? I say that I look at the weekly time frame if I have to find good short-term trades. So weekly time frame क्यों? Short-term trade है, अब daily time frame देख लीजिए. No. If I have the weekly time frame, my weekly trend is always with me. If my weekly trend is always with me, I have less chances of going wrong, number one. Number two, there are two things in the market. You expect something to go from 500 to 550. Either it goes from 500 to 550, that is one thing, or it goes from 500 to 510, it comes down again. You will segregate these two types of moves. The one which went from 505 to 550 were always the ones in which 2-3 time frames, one lower time frame, one higher time frame, and the time frame you are trading were always showing the same direction. Yes or no? So the different time frames are going to help you to be in the move you are supposed to be in. You have expected yourself to be in. Because from 500 to 510, it goes up and you expect it to go to 550 because that is what you estimated earlier, and you think you're right because the price has gone 150 in your direction. But then it totally rules everything out. Why? Because in one pattern, in one time frame, you had overanalyzed, not matched to the other time frame. So in the daily chart, you see something. That time you traded and trading in the same trend. So if you see something bullish happening in the daily candles, I think I'm answering the question, Vibarish, now. You see bullish something happening in the daily candles. Next thing you know is the next day you look to find the daily patterns in the daily chart. The intraday patterns in the intraday chart. Right? This is like a very short description I'm giving. Obviously, there is endless details to intraday trading. This is the essence of what I'm saying. Or if you are against the trend, say daily charts are going down, and you want to buy intraday, all you know is happens is that you focus a lot for intraday trade. You see prices at the right time you enter. You entered, say you expected it to go from 1000 to 1050. You enter absolutely at the right time. The moment you entered, it's not gone down. It went up 8 rupees straight. 1000 to 1008 it went. And the speed at which it went up in similar speed it came down. You didn't book your profits. On the other hand, something was bullish in the daily chart, and you wanted to trade it long intraday. You have better results. But a lot of people are always in the hopes and expectations because they, instead of following the price movement and the patterns, they follow specific stocks. And then they say this has gone down. This we बहुत नीचे आ गया. We love bargains. The thing is, all the economics of bargains and demand supply does not work in markets. In markets which has got less demand, the price will go down. And as the price goes down, demand is less. Price goes up, demand goes more. That is why trends continue to trend, right? So we are not going to why on every concept but candlesticks for today. So this is the time frame. The trend obviously now the time frame, the trend they go hand in hand. So I'm talking about the alignment of the right time frame. I'm obviously talking about the dominant trend in the larger time frame. Number 3, placement of the pattern. A lot of people don't focus on where the pattern is placed. If the pattern is placed in the right place compared to another place, compared to the same pattern, not placed pretty well, they will have completely different results. When we, in some time, we will do this. I'll show you what the placement and what I mean by it. Lastly, the most important is a conjunction with other technical patterns. Now, when I say technical patterns, I just don't mean patterns. I also mean that, all technical concepts. This should be in conjunction. Quickly moving on to the first candlestick for the day. The hammer pattern. So what we're going to do today with hammer pattern is understand what it means. First of all, hammer has got a small body. It can be a green body or it can be a red body. Small body and a very long lower wick. The smallest definition of a hammer according to the pattern is a small body and very long lower wick. At the same time, it can have either little or no upper shadow. Correct? Little or no upper shadow. Little or no upper shadow. Long lower wick, little or no upper shadow. Next thing you know, this is the definition. Now let's see what actually happens. So in this candle, in which the closing is green, the price opened over here. During the trade, traded. The low of the day was this, and then it again traded and it came up again and it closed over here. This only can happen now. What else can happen? If this is the daily candle, within the day, it went down, it made this low and went up. In between, maybe some 3 other types of movement must have happened. But all in all, this is what happened, right? So if I cut open this area, if I cut open this candle, and I say, let's see what would have happened in the day. Let's take a feel of it. I would have said, okay, this is the daily chart. Price is open. It has gone down. And it has gone up. It's closed higher. Closing is higher than the open. At the same time, a small real body. I am cutting this open. Is everybody understanding what I'm saying? Resonating with me? Similarly, I'm cutting this open. What is the only difference between these two? Okay, fine. The close is lower. The close is lower than the open. In that case, what will happen? That it is going down, opening, going down, coming up, but closing a little lower than the close. So this is the second case. And the first case was opening, going down, closing above the open. I have cut open the hammer. Which case seems more bullish? Which case seems more bullish? Which case seems more bullish? I want answers from you. This one or this one? The green one or the red one? The first one. Correct. Now you understand why the green candle? You know, what are the multiple things which come together now? Right, Mohammed? Correct. This is the hammer. Moving on. Okay. We know the shadow. We knew the open close. Now let's see, this is one perspective we get. Let's see it from another perspective. I say that whenever the hammer is made, hammer is made, price is rejecting the lower levels of the day. This candle is rejecting the lower levels of prices. So today, it opened, went down. The lower levels got rejected. Lower levels got rejected. So if lower levels get rejected, what sense do I get? I get a bullish sense. Third perspective you will see. Yes, absolutely. Bullish sense. Third perspective you will see. I said that within one day, the downtrend, it must have been, if this is the daily candle, for example, if the hourly trend is down before this candle happens, within this one day, we not only touched it low, but we also made a higher high. So the trend change, there is a potential trend change. Now what I just made over here, this seems realistic to you? They seem realistic to you? If I show you an hourly chart, you have seen these things happening? अब इस पार्ट के अंदर हैमर बन गया, इतनी सी एरिया में ये हैमर बन गया, अगले दिन थोड़ा सा करेक्ट होता है तो डरने का नहीं. Getting the point? If it corrects a little bit the next day, don't fear. If you have analysis in place, if it is mixing with other 10 things, this hammer is quality hammer, then you will get your move. So we saw one candle from three perspectives. And now we know why hammer is bullish. Because when we go one time frame lower and one time frame higher, all this perspective should come with some level of quality. I will not use the word perfection, but some level of quality. Are you getting my knack of what I am saying? If you're getting the knack of what I am saying. Right. Thank you. Now let's look at this hammer for example. So, what happened after this hammer was a very, very strong bullish move. Well, one way in which hammer over here is helping us is by coming to the previous support and making the hammer. The price is made a hammer after coming to the previous support. So obviously, there are loads and loads of concepts, and they are very niche, some very quality concepts, some occur very rarely, some occur only in certain phases. But I'm not going into all of the concepts. So I'll just take this one example. The potency of this hammer. The potency of this hammer has increased because this is at the previous support level. Previous low naturally a support level, so that's it. The potency of this hammer has increased. Price rejecting lower levels. Now, ये तो देख लिया. Let's look carefully into this. ये authors कभी कभी ना उससे वही चीजें दिखाते हैं जो सही वर्कआउट हुई. गलती हो जाती है कि हमें तो यही नहीं पता इस हैमर का करें क्या. After what we have done together, today, if I am to cut open this area, which is this circle which I have made, if I were to cut open this area, I've cut open this area, right? Something like this. Obviously not so bullish. So obviously when I teach, I just don't make these drawings. I go into the different time frames, but we don't have the time to go so details in one session for so many different things. But you're getting the feel. Every time I go to the smaller time frame, it should support. This is not supporting. Every time I should go to the bigger time frame, there should be something to support. This on the bigger time frame is clearly a downtrend. Even if this is a daily chart, I'm making the weekly chart, it will be a clear downtrend only. No support from the weekly chart. On the thing that I just cut open, on the smaller time frame, maybe the hourly chart, no support from this. And here we probably have both kinds of support. Fine, the weekly chart is still downtrending, but at least we have a support level of the weekly chart. At least, maybe this is one week which became a slightly bullish candle compared to the previous bearish candles. We'll do more examples normally. We'll use the Indian market examples. So you understand the essence. The market is rejecting the lower levels. There is a swift move up after a down move in the same time period, in the time period of the candle. So if this is a daily candle, fine. In the day, there's a swift move down and swift move up. Market rejecting lower levels. Look at the zone, the placement. Was that a support zone? How was the candle placed? There is no perfection in this world which exists. You have to perceive it. Is the definition of the candle matching? By definition, what do I mean? Is the upper wick there? Is it a very small, negligible upper wick? चलेगा. थोड़ा ज़्यादा upper wick? No. Because this is hammer, but this is not so happening hammer. So there is a strong red candle left on the left side of the hammer. कितना मिल जाए? How potent is it? There is more than one signal from a hammer. You should understand that also. What is that? More than one signal from the hammer? Let's take the chart of Nifty. Now I generally go the backward way. I explain what the other signal from hammer is during class, but then just to create that important element of the essence, I'm telling you now. I say that the place where a hammer occurs makes a support zone. Whenever there's a hammer at a certain place, it creates a support zone. So this is the daily chart of Nifty. Okay, let's just pick up how many hammers do we see. I see a clear hammer. I see a small hammer over here. I see good hammer over here. Pretty much every short-term low has, wherever there is a hammer, there is pretty much a short-term low. This has led to new lows, but still there is some bullishness after. So when we are talking about hammers, what is the better placement for hammers with the trend? Here we have already started a downtrend, so the hammers are less effective. When we say that with the trend, then we say the different time frame. Now I'm telling you that every time you will see a hammer, understand that wherever that hammer is being formed makes the place a very strong support zone. So the Brexit day was this hammer. Yes, I will zoom in the chart. The reason why I'm trying to say is, let's just look at the support zone it has created. So when the market has rejected the lower levels, this area, as market has rejected, whenever market comes here, it rejects it again, takes support again. Am I clear? Now let's move to the weekly chart. I just told you something. Wherever I see a hammer, that zone becomes a strong support zone. Look at what has happened. Am I clear? Look at the combination. The low of the hammer, price comes and takes ultimate support near that area, leading to a very powerful trend. The opposite of a hammer is something called a shooting star. So I will get into that, and I'm going to show you another example. Now shooting star, how many of you know shooting star already? What shooting star is? हैमर को आप उल्टा कर दीजिए, वो शूटिंग स्टार। तो ये है ना जो एक शूटिंग स्टार, मैंने क्या क्या हैमर को उल्टा किया। So what do I get? A long upper wick, a small body. What is the tone of the candle? Bearish reversal. Mostly bearish reversal. If the placement is good, it will reverse. The price comes up. We have a shooting star. It goes down. ऐसा होता है हमेशा? नहीं होता है. मैं क्या बोला? वो सपोर्ट है तो ये है रेजिस्टेंस. The upper wick area of a shooting star is a resistance. So let's see this upper wick area over here. Price comes to the upper end of the range. Resistance comes back down. Strong move. 2-3 Sundays back we were having a class, my general course class, and somebody was speaking about crude, and we had already deciphered this. And when we did candlesticks, I explained them why I saw this, what I saw this over here. Obviously, other things were also included. Let's just look at the accuracy. So there is more signal to candlestick than just an immediate signal. If this has not shown me, or if I have missed out the immediate fall, or the immediate fall has only been this much, just imagine this signal would be far, far, far more potent, far, far, far more bigger, better risk reward. तो जरूरी नहीं है कि कल जो कैंडल दिखाया है तभी सवेरा होगा. अब जब बाद में जानने का मौका मिलेगा तभी सवेरा होगा. ऐसा भी हो सकता है. किरण जी आस्क्स, कलर ऑफ द हैमर कैंडल मैटर नहीं होता है? किरण जी, वेरी 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 गुड क्वेश्चन. आप बोले कलर ऑफ द हैमर मैटर नहीं करता है. थियोरेटिकली मैटर नहीं करता है, बट अलग अलग केस में अलग अलग चीजें होती है. जैसे मैंने आपको कहा कि अगर कलर अलग है, तो कलर अगर ग्रीन है तो क्लोज इज हायर देन द ओपन. दिस इज द ओपन, दिस इज द क्लोज. In the overall significance of what has been happening on the left side of the chart, suppose on the left of the chart there's been fall, तो शायद ये भी उतना significant नहीं होगा. If the fall is in the worst of the moves, it is very difficult to explain without actually explaining the actual concept. But the point is that in the worst of the moves, even that may not be significant. And in the smallest of the candle where there's an open, close is only here. But this move is with strong volumes, maybe because volume someone everybody understands. So the close is in the red candle only. But this move has a very good support area, is with very strong volumes, and all things come together. This is going to be more powerful. In general basis, in general, what happened is that close above the open is far more potent for the bullish candle. Am I audible? Kiranji just said that I'm not audible. Audio lost. 1 minute. Hello? Yeah, I'm audible. Fine. Alright. Is everyone with me now? Now moving on with the presentation. Let's take a bullish candle this time. We took a bullish candle, which was a hammer. Let's take a bearish candle. It's called a dark cloud cover candle. So over there we took the bullish candle and we went to the bearish candle and we discussed the different kinds of property and we discussed how important it is to look into the perspective of different time frames, which would lead us to a perfect candle with a perfect setup. Now, something in the crude, maybe I did not sell it immediately at that time with that shooting star. Maybe that time I was probably I did not pay attention. I've missed out the chart, the weekly chart. Maybe the trend was still up. Maybe the particular pattern was not there. Maybe the risk reward was not good. But later I got a better risk reward, a better move. So candles, not just this, but even dark cloud cover, even bearish engulfing, even bullish engulfing. All of them have certain nature. And sometimes not the signal which is immediate is not the only signal. Now coming back to new candlestick. Currently everyone can hear. I think there's maybe some problem with this thing. Now the thing is, dark cloud cover. The first candle. Now what is it? Is the shooting star or the hammer? These were the single candlestick pattern. The double candlestick pattern, the triple candlestick pattern, sometimes even more. So in case of a dark cloud cover, it's a double candlestick pattern. Where does it occur? Occurs after an extended up move. We're not going into the details what extended up move is. The last candle of the uptrend, probably the last green candle of the uptrend is a long green candle, followed by a red candle which covers more than 50% of the body. So it covers more than 50% of the body. It may not close below this, but it covers more than 50%. 50% in the language and parlance of candlestick charting is called the stomach of a candle. It's called the stomach of a candle. So 50% is the major focus over here. Covers more than 50%, we prove that it is a dark cloud cover. It gaps up. Obviously, if this is the closing, if this is the open, this is the closing, this is the green candle. Or to make it a red candle and have the opening higher, it needs to gap up from the real body at least. Now, a lot of authors say that it should cover the upper wick also. A lot of authors say no, se body hone se chalega. Again, there is a sense of subjectivity. Technical analysis is actually more subjective than fundamental analysis in many ways. But people don't realize it. They think it's too easy because it's too pictorial. So it's visual, but it can be subjective. Point is, what essence do we bring out of other different analysis? What do we prefer? Now, having a open above the previous day's high means that all who are carrying positions at the end of this day and all those who have the positions at this day, at this high level, all of them got an opportunity to exit the position in profits. Anybody who bought over here, anybody who carried forward the position over here, got an opportunity at the gap up to exit it on profits. Point. This is perspective number one. Another perspective is the bears who could not overwhelm the bulls, hence it was an upward trending day. It was an upward trending day because the bears could not overwhelm the bulls. They have not just overwhelmed the bulls, they have overwhelmed the bulls from a higher price. So, इससे भी ऊपर से they have overwhelmed the bulls. So if I cut it open, the red line which I've drawn, if I cut this to a candle open, you will see something like this. Yes or no? Close is below the body. Now 50% of the body, so 50% Q. 50% Q. Because this is the day and the activity of the day which is pertaining to the position being taken away, taking forward to the next day. The 50% level has a significant technical impact. It has been backtested and seen. The 50% of the days, this thing is a very pivotal point, and that is why 50%. So what is 50? 49.5%. Can it be a dark cloud cover? Yes, it can. What if it is 51.2%? Can it be a dark cloud cover? Yes, it can. It cannot be so significant in 51% also, as when traded in 49%. So don't stick to that 50% thing. This is a rough thing estimate that it should cover more than half the body. Correct? Now what is the essence we take out from this? Bears are overpowering the bulls. Move goes beyond the half point of the trading of the range of the previous day. Move goes beyond the half point range of the previous day. Look at the zone, the placement, and the perfection by definition. As we discussed in the previous hammer, obviously there's more than one signal. You need to have the eye for it. Now, speaking about the essence more vividly, in the hammer and the shooting star we saw that the shadow of the candle is signifying us the essence of the candle. Here, the shadow of the candle is not signifying us the essence of the candle. Here, the body of the candle is signifying us the essence of the candle. Here, the shadow was signifying as the essence of the candle. This shadow, correct? And here, the red body of the candle presents the essence of the candle. So look at how this candle is different from that. This will give you a clue what to look at in different parts of the trend, or the uptrend, downtrend, or whatever. Whatever the trend, we are trying to looking at exactly and what it means. This gives us a smell of a more emotion of the market. Whenever you see a bearish engulfing a dark cloud cover, the emotion of the market is more bullish, more bearish. That gives us a sense of something that is being rejected in and not fitting inside the ongoing trend. In the downtrend, hammer doesn't fit in between. Does not look good. Why? Because low price is being rejected. How can it be hammer? How can it be bearish? Low prices it's got some bullish potential. Now hammer looks more attractive. But what would you like to trade more immediately? A hammer or a dark cloud cover? You tell me. What would you like to trade immediately and not wait for that, the future signal and all that? Obviously, that all can come with time. But what would you like to trade immediately? A dark cloud cover or a hammer? So what is your sense telling you? Write in the question box. I got one answer. I want more answers. Okay, what would you like to try? Okay, now I'm getting different answers. Very nice. Please answer everyone. Mohammed has got the right answer. He says the dark cloud cover he would like to trade more immediately. Provide is very well tried and respect your perspective. But the essence what I was trying to explain is that the dark cloud cover is showing us the emotional and this the smell of the emotion, the atmosphere of the market is changing because the body is showing us the emotion. Whereas the wicks in the hammer and the shooting star is is to some extent showing us the emotion being rejected from the previous emotion. We're not going into the trading of candles, the risk reward trade as of now. But today's webinar was more about the intuition, the feel, the perspective, and the correctness, the theoretical, and the analysis oriented correctness of the candle. Because you're charting and you're trading, they have to be different. But the only challenge is to keep your charting and your trading different. But if your charting is as perfect as possible, it will be easier for you to keep your charting and the trading different because you won't have much to be different. There would be not much different points. So your charting needs to be practical oriented. This webinar was giving you the idea of practical oriented charting. Now blending candles. What do I mean by blending candles? And this you can try at home. This is giving you, now this will answer both, the two queries. This is the piercing pattern, which is the opposite of a dark cloud cover. This is the dark cloud cover itself. So this is a shooting star, which is made by the dark cloud cover. Look at how beautiful things come together. This is happening in one trading session. This is happening in two trading sessions. The second half is happening in one trading session. I guess you getting the feel of how things are happening. So when something is happening in two trading sessions, it is more angular. This is more immediate. So this may give you an immediate fall. This may give you a pullback, then a fall. Different things for different things, different patterns. Just get the feel how close this hammer is to the piercing pattern because I'm blending it together. It's very interesting stuff. If you go home, look at it that way. It's extremely interesting stuff. Any more questions? So guys, I think we'll call it a day for today. We discussed candles, changed the perspective, and we looked at it from very fresh perspective. And before I go, a little bit about my course, which is a webinar-based course, a 15-session course which I teach. It's called Technically Sorted, and it's got all the advanced concepts, but we lead from the very basic core level, and we take it to the advanced concepts. We're beginning a batch in April. So the course goes about 2.5 months. It's a weekend course. In fact, an hour from now, I'll have my session with the batch which is going on. And besides trading 24/7, not 24/7, Monday to Friday, I'm into teaching on weekends. So obviously, with these free webinars and the recordings will all go there. But to get a more structured learning from me, you could choose to join the course. Now, this webinar is not meant for the course, but in case you're interested, the fees, the course structure, the course content, you can contact my course coordinator or the real man behind the scenes who is doing a lot of setting up is Mr. Ashish Dalmia. You can contact him. You can contact me also in case you want to know more about my course. I will end this webinar today. If you have any questions, you can ask me. If you have any feedback, you can give me. I'm waiting. Right now, you can answer me. You can just type in whatever you need in the question box. Some of you have really participated, and I'm really thankful for your participation. Do you have anything to ask? Okay. Thank you so much. Thank you. Yeah, thank you also. And the only thing which I feel that we need to understand about candlestick is practice. Practice not just the right perspective, but also the right essence. Take a lot of things together. I could only show you one or two examples because the idea was to cover the more perspective about candlesticks rather than the every candlestick pattern. I hope this has helped you. I hope you will take this forward in your analysis and benefit from it. And I have my own WhatsApp group, which is for the free webinars. I have my own course going on. For anything you need, you can contact us. A lot of you are known to me from other sources. So, you can contact and you can be updated about the free webinars which happen every Sunday. So thank you so much for coming, all of you. And I'm really thankful that you came. So if you're thanking me right now, that's good. But I'm really thankful that all of you came and you spend your Sunday morning learning something new. All right, then I'll call it a day.